Hello and welcome this busy Monday morning to Market Insight. It's the start of a new week. I am Lavina Emma. Now recently, the National Bureau of Statistics said Nigeria recorded a 1.4 trillion naira trade deficit between October and December 2023. So what is a trade deficit? So a trade deficit is when a country's imports exceed its exports during a given period. So this means what a country is buying in terms of goods and services are more than what the country is actually selling to other countries. So this situation came up during the fourth quarter of 2023, according to the National Bureau of Statistics. So these are the figures. So from October to December of 2023, Nigeria's exports totaled 12.69 trillion naira and total imports stood at 14.11 trillion naira. So this indicated a 1.41 trillion naira trade deficit. So this situation has led to a lot of concerns about the balance of trade, domestic production, and the strength of the country's currency. Meanwhile, it's not just this situation came up during the fourth quarter of 2023. So as at the third quarter of 2023, Nigeria had a trade surplus of 1.31 trillion naira. So meaning the country's value of exports was actually wider or larger than that of our imports actually, which is actually good. So we had trade exports of over 10 trillion naira, and our imports was 9.04 trillion naira. That's why we had 1 trillion naira higher than the imports. So on today's show, actually, we're going to be talking about this whole situation of our trade deficit. And by the fourth quarter of 2023 was when this situation changed. The trajectory changed within Nigeria's trade recording as the value of imports outweighed the value of exports. So we're going to discuss what led to this trade deficit, and after that, what are other issues that we can use to solve this trade deficit situation. Yes, we know at the moment the naira is really being devalued, and it's currently 1,600 naira or more against the dollar. So this has been going on for quite some time. So if we can actually go back to the way it was before the year 2023 ended and we had more of a trade surplus, that will be better. So joining me to discuss this is Mr. Ugochukwu Oguike. He's my guest, joining us via Zoom this morning. So he's the head of operations at Souq Norma Nigeria Limited. Welcome to the show, Mr. Ugochukwu Oguike.
Good morning. It's a pleasure being here.
Yes, I'm happy you're here with us this morning. Thank you for joining me this morning on Market Insight as we discuss balancing Nigeria's 1.4 trillion naira trade deficit. Now, how can Nigeria increase its exports and reduce its imports? Actually, like I mentioned earlier on, we currently have a trade deficit of 1.4 trillion naira, and we've had this situation started from the fourth quarter of 2023. So how can we work on increasing our exports and reducing imports? Yes, Mr. Ugochukwu.
Okay, it's funny that based on MBS, that statistics was captured from Q4 2023, and you would see that that represents the peak of our productivity as a nation, and just at that moment, we're still experiencing a decline, in exports in relation to import of over 14 billion. So, and if you look at it, some of the factors impairing our ability to export products out of these countries are basically standardizations. We've got a lot to do in terms of production and then packaging of our products. A lot of it's not like our people are not trying to export. They export, and many times they suffer severe damages because these products are not able to pass basic quality check parameters. And so we can approach it two ways. One way is to improve the standards of our production, and then produce policies that encourage export of these goods, or we can look within to try to drive down the rate of import. For instance, there are several things we import into Nigeria that we have no business importing, if only the government will look in. So again, I would want to approach this from the place of from place of policy frameworks that are not encouraging. They are not sufficiently encouraging to allow for local productions in the country. So let me take for instance, Nigeria is currently importing. I mean, the news has it Nigeria has given license for the import of maize. Nigeria imports rice. Nigeria, I mean, the current administration has lifted the bans on several items, over 45 items that were on the import restriction list. All of those bans has been lifted right now. And we know in terms of competitiveness, we cannot compete with some of our Western counterparts. With respect to cost of production, unit cost of production, because they have scale, they produce relatively cheaper than we do. So, you know, you can imagine that we're importing maize into Nigeria and the landing cost is cheaper than what we currently have in our domestic market. It simply means that we've not done enough to encourage or enhance the effectivity of our local content or our local producers. So we want to first of all approach this from a policy perspective. The government has to do more, you know, to create an enabling environment to allow our people produce. Part of the challenges plaguing production in Nigeria is logistics, you know, 2, quality inputs. 3, you know, there are several issues plaguing us, from cost of finance, you know, to logistics issues, to technical know-hows, to mechanization and all of that. So Nigeria is heavy import dependent. We are still heavy import dependent. And the little we produce in Nigeria does not meet the quality parameters to be taken outside of this country. In fact, to be able to export, you have to be involved from the production upwards down to when, you know, it is shipped out of this country, or otherwise you risk losing all of your invested finances. So I think we should look at driving down import by looking inwards and seeing what we can do to enhance productivity, and then focusing again inwards to see how we can improve the quality of what is being produced, and thereby meeting the international market demands. Thank you.
Okay, yes, thank you for that, Mr. Ugochukwu. Yes, I understand what you have said. We need to improve on our local production. I also mentioned that we have issues with, in terms of producing locally, in terms of logistics, finance, and also the technical know-how. But we also know that in this country, we have some very creative people who are also quite hardworking. If you talk about technological know-how, people who want to create things, from food items to raw materials to other things that can be exported, that we can export to Western countries for them to use there. But when you say technical know-how, I feel Nigerians are very creative and we have the knowledge to actually create things of standard quality that we can take out, we can sell out, and we can get back money to our country actually. So why do you, I just want to actually change that perspective. And then I also want to say that because we have these issues, don't you think it's more of the government not encouraging the citizens in terms of our technological abilities and our abilities to be very creative in creating very standard products that will enable us to sell our goods and services out there? Yes, Mr. Ugochukwu.
So you and I probably, I answered the question you threw at me. You're talking about trade deficit. So you're talking in terms of naira and kobo. You're not talking in terms of volume. If you're talking in terms of volume, we're not doing badly in terms of volume export. Because if you look at volume export, then you look at what are we exporting? Are we exporting raw material or finished product? Nigeria is still in the business. We are still at exporting fancy. We are still exporting raw materials. Nigeria is not exporting refined petroleum products, we're exporting crude. In fact, of recent, it's so embarrassing, our country is currently importing crude. Dangote refineries are currently importing crude, you know. I mean, so we have one of the best crude in the world, but we're currently importing crude. So if we're talking about trade deficit, and that trade deficit, we're talking in terms of money. We're talking in terms of 1.4 trillion. 1.4 trillion. That's money. We're not talking volume. So in terms of volume, yes. But if, take for instance, Nigeria exports cocoa. We export maybe say 1 million metric ton of cocoa. how many containers, how many kilograms of chocolate do we need to import into the country to cancel that out? How many chocolate manufacturing plants do we have? We have the few factories in business currently exiting. The cost of power is outrageous. The cost of logistics is outrageous. The cost of doing business in Nigeria generally is outrageous. We have high cost of finance.
Still going further to explain how we can actually get out of this trade deficit situation. Actually, he'll be back with us in a few moments. Okay, yes. So, yes, Mr. Ugochukwu, I'm still here with you.
Okay. Yeah. Okay. So the cost of finance is about the average commercial lending rate now is minimum 30% in Nigeria. So if you want us to produce, if you want us to
I understand everything.
If you want us to manufacture products in Nigeria,
what
right?
policy measures do you think that the Nigerian government could implement to reduce this trade deficit? Yeah, I said, what policy measures can the Nigerian government implement to reduce the trade deficit? Yes, okay. Yeah, we're having a bit of a technical issue with Mr. Ugochukwu, but we'll still soon be back with him. Yes, he actually mentioned. Okay, so welcome back, Mr. Ugochukwu. Welcome.
Yeah, sorry about that. Network's a little bit unstable. If we are having conversations around trade deficit, you've got to understand is the value of what we are exporting versus the value of what we are importing. We're exporting crude and importing refined petroleum products. Those are not on the same level. We're exporting cocoa and importing chocolate. They are not on the same level. We're exporting timber and importing toothpicks. We are exporting rubber and importing tire. We're exporting. So you've got to look at our export in terms of volume is small. But when you talk deficit, you're talking in terms of money, all right? You're talking in terms of value. So we would naturally have those deficits because we do not have value addition ongoing in Nigeria. And if you want to increase your earnings, then you must increase in the output of value. It simply means we need those industries working again. And to have industries working, you need energy. It's part of the reason why what His Excellency Dr. Alex Oti is doing in Abia State is highly commendable. You must solve the epileptic power challenges we have to have industries, in business. You must solve the cost of finance. Nigeria is currently having forex issues. We've been having forex issues for a while. That does not encourage investors, institutional investors to come in, because the problem is we bring in our dollar and we can't take it out. All right. That problem has to be solved. And the one way we solve that problem is to increase the value of what we export. We cannot be exporting raw materials. It's funny, Nigeria is still exporting gold. Nigeria is still exporting sesame. Nigeria is still exporting columbite. We're exporting mineral resources out of this country for crying out loud. So there are better ways. However, if you want to focus on value addition, then you must begin to look at the infrastructures that support those. You must look at subsidizing energy. Everything in Nigeria right now is without subsidy. Power is without subsidy. Petrol is without subsidy. Gas, diesel is without subsidy. You're taking subsidy off everything in the nation. And so it's not a business-friendly atmosphere. It's little wonder that businesses are exiting the climb. And if what then that reduces your economy to is a con. And as long as you are consuming, you're going to continue to have. That problem cannot be solved by the private sector alone. That problem is by the government, by putting in place policies, by putting in place policies and putting the required to encourage private sector driven.
I do
Thank you.
understand what you're saying, Mr. Ugochukwu, but I asked you, I said, what are the policy measures that the Nigerian government can put in place to reduce the trade deficits? What kind of policy measures can the Nigerian government put in place to reduce the trade deficits?
So take for instance one, before we begin to talk about policy, the policies must be sustainable, all right? So first of all, like I said, you want to deal with infrastructure, power, you want to deal with logistics. The current administration seems to be taking some very bold step in taking care of logistics, fixing roads, building light rails and all of that, and that's very, very commendable. Then number two is to begin to introduce policies such as export policies on raw materials. Nigeria can come up with a policy to ban the export of raw materials, whether they be food items or mineral resources or crude, and begin to insist on export of only finished products. Take for instance, the Nigerian government can come up to say, we won't export sesame, but we can export other sesame products. We won't export cocoa, but we can export cocoa products. It simply means we will then have to force all of the chocolate manufacturing companies, the sneakers and the rest of them, to have subsidiaries in Nigeria. If they can't have access to our raw materials, then they should come produce and manufacture from Nigeria and export to other countries. That way we attract more values. You know, if Nigeria begins to insist on the export of refined petroleum products rather than crude, then we have earnings coming into us. It will begin to insist on the refining of mineral resources such as copper rather than exporting of the raw mines. Then we can earn some more. All right. In that way, we can quickly balance out our trade deficit. But as long as we continue the export of timber, the export of raw food materials, then the future is very much determined. We will continue to import refined food products, refined material product. We'll continue to import refined petroleum product. We'll continue to import refined. We'll import every other thing. So we must begin to put policies in place that bans, first of all, the export of raw materials, and then place a lot of emphasis on development of local content. Take for instance, if Toyota wants to sell in Nigeria, there's nothing stopping the federal government from putting back the national center in Abuja back in form and saying, oh, come and assemble here. We're not going to be importing Toyota cars anymore. If Toyota cars must sell in Nigeria, just like what India is doing with Tesla, they're saying, we're not going to let you bring Tesla. If you bring it in, we're going to place heavy import duties on them. It will not be competitive in our local market. You want Tesla to sell here in India, will represent a huge market. Come establish your plant here. And when those plants are established, you want to say, okay, at your management level, we want at least 50% local content, which means at the management level, you want to have at least 50% Nigerians running the show. If they do not have the capacity, train them, empower them, and put them there. That guarantees that long after you are gone, we're still in business. Okay, so our government must begin to take bold steps and stands towards ensuring local production. But we are not doing very much when it comes to that. So I think, like I said, in the areas of logistics, I see the government taking some bold steps, but there's much more to be done. So those policies must be in place to drive compliance.
Okay, thank you for that, Mr. Ugochukwu. So what are the potential economic consequences of this Nigeria's trade deficit? Yes, we know in terms of job creation, we've been affected by that in recent times. And also, like you mentioned, in terms of our foreign currency exchange rate, so that's also an issue. But what other economic consequences of this trade deficit? How does it affect the Nigerian economy?
Well, you basically mentioned it. Those two are sufficient. It will every day the naira is you are losing money, I am losing money. It simply means that, right, is unable to buy, because you must look at for value. So the money has a special value, but then there is a value that is attached to that money. Take a dollar was going for 480, today is going for 15. It simply means if I got my phone 100,000. The same phone is going today for 400,000. That's the official value of that money. I have 100,000 in my account. I can no longer buy a phone today, even though I could afford one yesterday. So what has happened? I've lost money, and if I'm losing money, Nigeria is losing money. So if we are unable to fix this current trade deficit, what then happens is that we import more and more and more. And the more we import, the more dollar will demand. The more dollar we demand, the more we devalue our currency. The more we devalue our currency, the more the multi-dimensional poverty that is ravaging the nation. It gets bad, and then we begin to paint a scenario like the scenario Zimbabwe once was in. All right, where you have money and you can't buy anything. At some point, people are going to have to reject the money because it has no value in it. So we lose our national wealth. These are the consequences: multi-dimensional poverty, people unable to live, and people sleeping below the poverty index nationwide. So this, the government must begin to look critically at it. I know that no decisions at this point that will be easy. People are going to hard times call for, so if this continues unchecked, we're some turbulent times ahead. It has to be arrested.
I do hope so. It will definitely be fixed as soon as possible, because yes, we know the Central Bank of Nigeria, the governor has been saying that they're putting measures in place, but we just hope these things can be done as quick as possible. Okay, so now how can Nigeria address the underlying structural issues that contribute to its trade deficit, such as our dependence on oil exports and lack of diversification in the manufacturing sector?
So, first of all, there's nothing wrong with our dependence on oil. It's an asset, and we're proud of it. However, it's our inability to diversify and develop other sectors that is the major challenge hunting us. So every time the oil fails, we do not have any buffer or any other supporting structure, and it results in drastic and very, very quick impact on the Nigerian economy. So take, for instance, we have, just as we have crude in the southwest regions of Nigeria, we have solid minerals in the north. Chief of them is gold. We have gold, massive gold reserves in Zamfara. We have gold reserves in Plateau, and all around the country. We do not see the government taking control of these sites. Rather, they are being mined by private individuals. We do not see that, contributing significantly to the nation's pulse. We have agricultural resources. We have forests. We have agricultural produce. It's funny that in Nigeria, we have just 2 companies responsible for manufacturing the nitrogen-based fertilizers that is being used in the country. That's Indorama and Notore. Notore is even is currently being underutilized. They are not producing at optimum. They have their challenges, and so these are some of the things that government has to look at. It's got to be practical. The government has to approach this systematically, and government has to be intentional about its approach towards diversification. However, I would say over time we've had a leadership crisis in Nigeria and misappropriation of resources. To the best of my ability, we are still very much a spend and a consumption-driven economy. So it's more important to those in leadership how to spend money rather than how to generate it, because of course to generate money you must invest money, and I think that's where we're basically lacking. So the government must put this at its front burner to develop other critical sectors. We're so blessed. Nigeria has no business having trade deficits. We don't have any business with those. We just have to look at the infrastructure that is required to develop those sectors, and look at the policy frameworks that will guide and ensure compliance within those sectors and ensure that we get the maximum from those. So I think it's a problem of vision. Today, Dr. Alex Oti wants to revive the Abia industrial years. And one of the first steps, as you can see, is dealing with infrastructures. First, power. Second, logistics, road, rail. And he's taking on all of this stuff. Today, they are spending so much. But by tomorrow, we'll be telling a different story because apart from Lagos State, today already, as it were, Abia State is attracting the highest in terms of investment portfolios across Nigeria. What changed? Political will, direction, and then we can see tangible projects that are being undertaken that encourages investors to come in. So today, investors are flocking all the way to Abia State. Why? Because there's leadership, and not just leadership. We can see tangible actions that can guarantee that there's a conducive atmosphere for investors to, thrive. So I think the government should begin to be intentional towards developing this sector. I see very little or no effort. We have companies exiting the nation, and I see very little or no effort to ameliorate or prevent such. Every day we're experiencing job loss in the nation, and it just tells you that we're doing very little to help the situation. But at federal level, I think the government, and then at state level, the government can do much more than what we're currently seeing today. Thank you.
Okay, two questions. First of all, just quickly, the first is not just a very small suggestion. I want to hear from your thoughts on this. Now, wouldn't it be better? You mentioned that in terms of when the government needs to ban the exportation of raw materials, and we should focus more on improving our packaged goods, what we're going to be exporting. So, for example, as you all know, we have Innocent Motors in Nigeria. Wouldn't it be better if the government actually focuses on encouraging citizens and also foreign investors to actually, even the government themselves, when buying cars, to buy Innocent Motor cars? I'm just using Innocent Motors as an example, so that we can actually encourage more Nigerian produced things. That's the first one. Then the second one is, what role can the foreign exchange rates play in reducing Nigeria's trade deficits? Just quickly.
Yeah, so the government doesn't have to force anyone to buy Innocent Motors. The government just has to put policies in place that ensures that Innocent Motors is competitive enough in the market. Innocent Motors is not as big as Toyota. They are not as big as Volkswagen. They are not as big as Honda. So it simply means that Innocent is going to produce his car probably much more expensive than those guys do. So what do? We increase the import duty fees. We make it practically impossible. And all of these second-use cars are dumping in Nigeria. I understand that the average Nigerian needs to be able to get mobile. Government can focus on fixing the transport infrastructure. I'm talking about public commuting services. The government can focus on much more rails, BRT buses, all of those, to ensure that people can move from point A to point B, and then begin to crack down on the import of some of these vehicles. If you do that, and the cost of importing a fairly used Tokumbo is equivalent to the cost of purchasing a brand new Innocent, naturally the decision for a consumer will be to go for a brand new Innocent. But if it's still cheaper to import a fairly used or Tokumbo vehicle from Cotonou, then why should I go buy an Innocent? So I think it's a focus. You guide people to and help them make decisions. So first of all, the government must discourage imports by driving those fees up or totally outlawing them. Then secondly, the role that the exchange value has on this is, again, we're focusing on symptoms rather than focusing on the root cause of the problem. Every time we keep talking about exchange rate, it's so sad.
So my guest concerning today's show, how we can improve on balancing Nigeria's trade deficit, was Mr. Ugochukwu Oguike. We're joined by we were joined via Zoom, and he was talking about how the government needs to put certain measures in place to encourage our improvement in our local production, not just exporting raw materials, but also how to create something of standard quality that can be exported, and how we can actually increase more tariffs on imported goods so that more Nigerians will be forced to buy or patronize our locally produced goods. So thank you very much for joining us on the show this morning on Market Insight, discussing our trade deficit issue in Nigeria, Mr. Ugochukwu Oguike, and we look forward to having you again on Market Insight. Thank you for that. So now let's take a look at our money markets for today, Monday, 11th March, how the dollar is faring against the naira, and also against the pound sterling and the euro in the money market. So the official CBN rates for the dollar is selling for today, Monday, 11th March at 1,550 naira, and in the parallel market, that's the unofficial market, the dollar is selling at 1,618 naira, and the pound sterling in official Central Bank of Nigeria rate is selling for 2,023 naira, and at the parallel market it's selling for 2,050 naira, while the euro in the official rate is 1,726 naira, at the parallel market is 1,725 naira, and as usual the parallel market rates are actually higher than the CBN rate. So those are our money market figures for this morning on Market Insights, March 11th. Thank you so much for joining us this morning. So I'll discuss it with my guest how we can balance our trade deficits in Nigeria. And yes, he did give some very useful pointers, how the government needs to improve on our policy, how to improve on our locally manufactured goods, how the government should also ban exporting raw materials, exporting things like timber, gold, cotton, and we should actually focus on creating something of good quality standard that can be accepted in Western countries. That way we can actually encourage more exportation, and that way if people are bringing in foreign goods like cars and other luxury goods, and there's a high tariff when we are importing, most Nigerians will be forced to actually buy the locally produced goods. So that's our time today on Market Insight. It was a pleasure talking about our trade deficit in Nigeria, and hopefully we hope the right people are listening and we can also improve on our country's economy and move it back to what it was last year, on trade surplus. So that was our time this morning. Thank you for joining me as we talked about these issues and more issues tomorrow on Market Insights. I am your host, Lavina Emma. Stay tuned to more programs on Souq News.